Hello and welcome to this weekly market recap for the week ended Friday, October 31st, 2025. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com. It's a pleasure to be with all of you again this week. Hard to believe it's November. I mean, we're now moving into the last 2 months of the year. 2025 is going to be behind us before we know it. We've got another portfolio draft coming up in a few weeks. It's always takes place about the middle of the quarter after a lot of the earnings reports are out. We've still got another week or two of a large number of earnings reports, but most of the big reports now are behind us. Got a number of second tier companies that'll be reporting. Got Palantir reporting this week. I think Advanced Micro reports this week. So we're going to have some big reports still coming out. But overall, I think earnings season's been strong. Finally got a little bit of a lift in discretionary when Amazon reported its earnings on Thursday after the close. Amazon jumped on Friday to its all-time high. Our major indices hitting all-time highs, most of them. It's been that kind of a week, month, and a year. The market just seems to be relentless going to the upside with bulls quite resilient. Let's go ahead and jump in and just take a look at what happened last week and kind of work off of that. But yeah, I mean, it was a good week. We saw transportation stocks actually leading the market again. We haven't seen that in a while. Transports, though, last week up almost 3%. NASDAQ 100 stocks led again by technology, gaining nearly 2%. The Dow Jones, which broke above 45,000, that breakout measures ultimately to 53,000. I think we're on our way there. Dow up about 0.75% last week. S&P 500 gaining almost 0.75%. The two laggards clearly last week were the Russell 2000 small cap index along with the S&P 400 mid cap. They did stage a little bit of a rebound on Friday. Maybe that'll be the start of something. All of the major indices really love this time of the year. The last few days of October into the first week of November. Futures at this point are higher. Heading into tomorrow, we'll see whether or not that lasts throughout the night, but at least for now, it does look like futures are looking to open, the market looking to open higher on Monday morning. Taking a look at the sectors, there's technology, another solid week of performance by technology stocks, gaining 2.4% for the week. There's consumer discretionary, also outperforming the S&P 500. It wasn't that way until Friday. Consumer discretionary was lagging, but then, like I said, Amazon came out with the big report. Amazon, Tesla, the two biggest components of the XLY. Amazon with their report up pretty strongly on Friday, although it did finish off the highs of the day. Tesla also having a strong day on Friday. So that combination really lifted consumer discretionary for the week. Those are the only two areas of the market, but they're two big areas that outperformed the S&P 500. You can see the other 9 sectors underperformed the S&P, but that's normal. And when you've got technology, which is 35% of the S&P 500 outperforming, doesn't leave room really for too many other groups to outperform. And that's what we saw last week. Still, industrials did finish third for the week. Then we had energy. Down at the bottom, real estate, materials, consumer staples, utilities, financials, a lot of value-oriented stocks really taking a little bit of time off last week where we saw growth, technology, consumer discretionary leading a little bit more. So overall, though, great action. Love to see growth leading the market to the upside, setting new all-time highs. I got a chart I'm going to show you with my sustainability ratios that I like to follow, where I do look a lot at the aggressive versus defensive areas or growth versus value. Anyhow, we'll take a look at that in just a minute. S&P 500 breaking out above that recent high earlier in October, just below that 6,800 level. Not only did we get through 6,800, but we made our way through 6,900 last week before seeing a little bit of selling into the end of the week, but still very, very solid action with the S&P 500 finishing at 6,840. With just 2 months to go in the year, we're getting closer to my 7,000 target that I set back at the beginning of 2025. I don't think we're going to have any problems getting to 7,000 based on what I'm seeing. NASDAQ 100 also breaking out above the early October highs. That was just above 25,000. We went all the way up and reached through 26,000 before, like the S&P 500, pulling back a little bit into the end of the week. Still, overall, very, very strong action. The IWM small cap Russell 2000, you can see still in an uptrend. It wasn't a great week for small caps on a relative basis, but there's no really any significant deterioration on the chart. We fell back below the 20-day moving average, but the uptrend remains in play. I do want to see a little bit more of a bounce from small caps in the upcoming week, but this pullback, again, still trading above that 50-day moving average. I think if we were to lose the close from that Friday a couple weeks ago where we closed down at like 237, 238, I think if we lose that level, that would be losing not only that price support, gap support, but also would be below both the 20-day moving average and the 50-day moving average. That would maybe make me a little bit more nervous about the small caps. But right now, I think outside of just underperforming this past week, really nothing to worry about technically on the chart. Transport. So this is where we're seeing a little bit of relative strength, but still on an absolute basis, not getting any kind of breakout of significance on transports. I'd really like to go back and take out that double top from back in July. Transports love the month of November. I'll pull up the seasonality chart here for you. I've been showing this pretty often, but let's try this again, see if I can type it a little better. There we go. So if we go back just through this secular bull market, last 13 years, check out November for transports. 83% of Novembers over the last 13 years have ended higher, and the average gain in transports, 5.9% just during the month of November. So very, very strong action for transportation stocks historically, and during this secular bull market, during the month of November, it looks like, or at least I would expect it to continue. But then again, we've seen transports disappoint now for many months. We'll see whether or not history has any kind of positive influence on that group. All right, promised you those sustainability ratios. So let's look at the S&P 500. Here's that uptrend off of the April lows. Check out the QQQ versus the spider. This is just a ratio that tells us that the more growth-oriented QQQ is outperforming. I don't want to say the value-oriented SPY, S&P 500, because it's more than just value. There's a lot of growth in the S&P as well, but it's less growth than the NASDAQ 100. So let's just say the more growth-oriented NASDAQ versus the less growth-oriented S&P 500. That ratio climbing, setting new highs while the market's breaking out. I love that action. Consumer discretionary relative to staples. It was a little bit of a concern. We weren't really getting a whole lot of strength in discretionary versus staples. That changed in a big way last week, along with the last few weeks. And you can see now this is breaking out to an all-time high on the XLY, XLP. So that another very positive development relative, those consumer stocks relative to one another. The Russell 1000 growth versus the Russell 1000 value. Clearly, growth versus value breaking out to new highs. I love that. Another large cap growth versus large cap value ratio. This is just the Dow Jones US large cap growth index divided by the Dow Jones US large cap value index. That too breaking out to new all-time highs, pulling back a little bit late in the week, but overall very strong action. Mid-cap growth versus mid-cap value, a little bit more sideways, not really showing any leadership there one way or the other here over the last few weeks, just mostly sideways relative action. Small cap growth versus the small cap value index, check that out. Another big breakout. So we've got small cap growth stocks, which now also performing extremely well. And then I just left this on here, the transports versus utilities, which had been very weak. They're actually starting to pick up here over the last couple of weeks. So that's been a good sign for the market. And then finally, copper versus gold, which has been downtrending for a while, also perking up here over the last couple of weeks. So just about everything we look at is showing relative strength in the areas that, we really want to see leading here. So overall, I mean, I can't really be disappointed with the action. very difficult to be anything other than bullish, to be honest. All right, I want to show you a group that loves the next 2 months, and it's aluminum. The group has been trending higher. It's had a couple of really nice days. It pulled back last week, and this, based on history, this could be presenting an opportunity, and I'll show you the seasonality chart in a minute. But we've now been trending up pretty strongly here over the last 3 or 4 weeks, and notice that rising 20-day moving average holding on and providing some pretty good support. So I think this pullback here, testing the 20-day, could be a really nice opportunity. Let me show you this seasonality chart. So going back the last 13 years, I looked at aluminum relative to the S&P 500. Look at November and December and the strength. First of all, just look at the second half of the year, how often aluminum outperforms the S&P 500 going into the end of the year versus earlier in the year. You can see that it just, I don't really have a reason for it. I don't have the explanation. I just have the chart. Over the last 13 years, it's been pretty clear that aluminum likes the second half of the year much more than the first half of the year. And look at the average here. I'm going to zoom in here a little bit. Look at the average outperformance over the last 13 years in November and December. In November, the aluminum index has averaged outperforming the S&P 500 by 5.1 percentage points during the month of November. And again, this is going back 13 years. And it outperforms another 5.4% in the month of December. 10.5% on average, aluminum has outperformed the S&P 500 over the last 13 years. I think that's significant. At least it's something we should be aware of. And when you look across at all these other months, the only other month that really has any bullishness at all is February in terms of average outperformance. But February's only outperformed 31% of the time. So I don't know that you really can rely on that. November and December, clearly, during this secular bull market advance, November and December clearly have been the two best months for aluminum. So keep that in mind. Now, I'm going to give you a sneak preview of our chart of the day, our EB Digest chart that we're going to have for Monday morning. And that is Carpenter Tech, which is in the steel area. Now, steel also, and before I even go any further, let me show you, I want to show you the steel chart. Because steel, check this breakout. Look at how we had gone sideways here for 3 or 4 months, trying to get through this 610 to 620 range. Failed on multiple occasions. Just within the last week, we saw a big move up, finally through the 620 level, up through 650, and then late in the week, we pulled back into the 620s. So this pullback, this is another area within materials that pulled back late in the week, but looks pretty strong. So we got aluminum improving in the material space, and we've also got steel stocks improving. And within steel, that's why I wanted to show you Carpenter Tech. This is a steel company. They came out, they beat their revenue estimates last quarter. They beat their earnings per share estimates last quarter. The stock broke out above the July high, which was around 290. And now, in my opinion, has great support at that 290 level, along with gap support just below 270, with the rising 20-day moving average in the middle at about 280. That's going to be a really interesting area of support if Carpenter Tech pulls back. So that's the chart that we're featuring on Monday morning for the Earnings Beats Digest newsletter. If you're not already a member or a subscriber to that newsletter, go to our website, earningsbeats.com. Both are plural, earningsbeats.com. And scroll down. You'll find an area here where you can type in your name, email address, subscribe to that Earnings Beats Digest newsletter. We'd love to have you. Tens of thousands of folks have subscribed. So make sure you join. Again, it's just name and email address, no credit card required. If you'd like to join our service for 30 days for free, our paid service, simply click on that green button and start your no-cost trial today. Like I said earlier, we have our portfolio draft coming out in about 3 weeks. So if you want to know what stocks are in our portfolio for the next 3 months? You'll find out simply by starting a no-cost trial, free 30-day trial. So make sure you join us. We'd love to have you. And if you like what we do here at Earnings Beats, make sure you like the video, subscribe to our channel. That way, anytime we do any kind of a free live stream, if you are subscribed and you turn your notifications on, we'll make sure we get in touch with you through YouTube when we do one of our live streams. So definitely check that out. All right. Last thing I have for you tonight is 10 stocks. Now, these are 10 stocks that have recently reported earnings, raised guidance. I think every one of these companies raised guidance. And these are the types of companies that you might find in our portfolios in a few weeks. These are companies that I think are trending up. Probably many of them are going to continue to trend higher. And I think many of them outperform the S&P 500 going forward. So let's jump in. First, Guardant Health. So this is in the biotech area. Look at that AD line just jumping to a new 52-week high with the big jump up in earnings. I think we got some nice gap support, some price support around 90, maybe just below 90. If we do fail to hold that, then potentially we could go down to the bottom of gap support. I'm doubting that we go down that far. I think probably this 88 to 90 area is going to hold the stock and continue moving higher. That's what I'm expecting anyway. Huge volume last week coming into a company that gap up. Check out Guardant relative to the biotechs. Biotechs have been strengthening over the past month and a half. Guardant, one of the better stocks there. All right, next up, let's take a look at TTMI. TTM Technologies, again, AD line breaking out, price action breaking out, holding on to that rising 20-day moving average. Great relative strength versus the electrical components area. I think this is a stock that is poised to go higher, TTMI. VIAV, and I might be butchering the names, sorry if I am. VIAV, VIAV Solutions, another AD line taking off, big gap ups. I love the strength. Gap support, top of gap support, just below $16. I think that would be the best entry if it pulls back. VRT, this is Vertiv Holdings, AD line strong, price action's been great. Check out that relative strength versus the industrial suppliers. Next up, AME, Amatec, I don't know. Again, not sure about the pronunciation, but what I am sure about is the action and the reaction from its earnings report and raising its guidance. I'd like to see that AD line move up and break out, but this is a nice clear breakout to a 52-week high after many months of consolidation. I think AME could just be starting a run. 196, 196 and a half. I would say that's pretty strong gap support. Cloudflare, net just continues moving up. This has been one of the best performers in 2025. It continues with the gap up with its earnings and raised guidance. I like this stock down in the 235 to 237 area on a pullback. MTZ, this one's been consolidating a little bit, came out with its earnings and seemed to be a little bit indecisive after earnings, but I think we just consolidate here sideways. I think anything back down around 195 would be a good entry point on Mastech, and I think eventually we're going to break out here. Eli Lilly, finally making a breakout, moved to about a 5-6 month high on Friday's close. That AD line's been strengthening, showing more relative strength, moving to about probably a 3-4 month relative high versus the pharmas. I think showing considerable strength. I think that continues. 2 more to go. ILM, this is Illumina. We've been downtrending for quite a while. You got to get, in order to start uptrending, you got to start somewhere. This was a pretty strong candle on Friday with its earnings and raised guidance. Look at the AD line shooting to a new 52-week high. Relative strength moving up to about a 9-month high. Volume supporting this move. Love that candle. I think if we did pull back, maybe down to around 108, 110, something like that, that would be a great entry point. The last one I have for you, another healthcare stock, Cardinal Health, another big gap up with earnings. Look at that AD line, relative strength breaking out, great volume trends, and now 182 is your gap support level there. All right, that is it for me. I appreciate everybody coming in and checking this out this week. It's always a pleasure to join you on the weekend, give you a recap, let you know where I think things stand. And honestly, couldn't be a whole lot more bullish. It looks like the market still wants to go. One thing I'm going to be looking for this week, first of all, it's normally a jobs report coming out, but with the government shutdown, doubt we're going to see anything on that for Friday. But what I do want to see is I'd really like to see those small caps bouncing back. And then one last thing maybe to take a look at is that 10-year Treasury yield, which had been bouncing. It really struggled at the end of last week at 4.10%. If this rolls back over, that's one thing that may have kind of worn a little bit on the small caps, is seeing that 10-year Treasury yield move back up last week. But I think this could be a peak. We could see that roll back over again. And if we do, I'd like to see some leadership from the small caps this week. That is it for me this week. Have a great rest of your week, everybody. I will be back on Tuesday with Trading Places Live. Hope to see you there. Happy trading, everybody.